Good morning, everybody. It is, well, it's still morning here in Seattle. I suppose it's just lunchtime on the East Coast. So wherever you're at, welcome. Let's start out today by just making sure that everything works. And if you wouldn't mind, somebody just pop in there on the text chat that you can see me. Trip says, "Hey, coach." So I'm assuming that means that we're live. You can hear me and maybe the camera's working. So welcome. Kevin, how are you? Good job. All right, everybody's ready to rock and roll. All right, Lee's our administrator today. Alyssa's also in there. Thank you for your help, guys, on the back end. We really appreciate that. And with that, let us begin. Let's see, this is up for this. Yeah, no problem. All righty, so we will start by making sure. All right, so has everybody seen the Trading Coaches Playbook with my outdated picture there, 40 pounds heavier? And man, that's yikes. All right, says yes, we can see it. Okay, great, guys. Let's get started. We may not be a little bit quick. I've got a conflicting appointment here right at the top of the hour, so we'll see how far we go today. I may not go the full hour, but that's all right. This is the disclaimer that we put up in front of every class that you've ever been to, and that's simply because of the way the world works from a litigation standpoint. We want to make sure that nobody here does a dumb thing. And when I say a dumb thing, and that is to take anything that I say as being advice on a particular trade, that you ought to run out and make a trade based on anything I say. This is educational, it's informational. We'll talk about trading situations. We'll show charts. We'll show all kinds of stuff, but we're not going to be giving any recommendations, just to make that clear. I'm sure that it is. I hope that it is, but just make sure this is education only, and you're to make your own decisions based on your research. But nothing wrong with getting educated, with talking with people, gleaning information, gleaning skills, improving your ability to make decisions. All right, there we go. Upcoming events. Rob does a phenomenal job. I compliment him every time I'm on this platform of the effort. I know the effort it takes to produce content, and I just respect and love my friend Rob and his family, and quite frankly, most of you guys, because most of you I've seen before, and some I have personal relationships with from in the past. I just appreciate tremendously the opportunity to spend a little time with you and try to share something that I think will help you in your quest to become a better trader. Okay, so take advantage of these, please. These are the links that are set up to, enhance your study, your training, your personal search. It's phenomenal. Okay, got an event coming up, a couple of them, a couple of special offers right here. As you can see, the Power Options plays. Rob's got a couple situations set up there for you to continue trading. And I mean, guys, take advantage of it. It is a journey. It's an awesome journey. Lee just put up a link to everybody on there for the to log into that options play, just so you know. The sign-up sheets on that are available. All righty. Well, today's class, the title is a little bit provocative, or it's just meant to be a little bit cute to stir up a memory for some of you that's old enough to know who Aretha Franklin is. But there was an old song that had to do with, the correlation of, who's driving this boat, who's playing who's zooming who. Anybody remember that song by Aretha a long time ago? Anybody old enough to remember this one? I'm just curious. I pulled it out of my head and somebody from my memory, and some people are probably going, "What? Aretha who? Who's zooming? What are you talking about?" But it's akin to the age-old question of which came first, the chicken or the egg. And what we're going to talk about today is the correlation between charting and price movement, and understanding that and appreciating the limits and the power of what we do when we go into charting, when we start doing chart movements. Guys, it's possible to get enamored with something and give more credit than it's due. I'm going to segue right now and just tell you briefly about my journey with Japanese candlesticks. I went from knowing nothing about Japanese candlesticks to becoming one of the recognized experts, if you will, in the country, given by the fact that the number 2 person in the world of candlestick charting said that I had come up with more original information on candlesticks than anybody had. That was quite the compliment, and I appreciated that. But it was part of a journey of just delving into something that hadn't been delved into that much when it came to application of Japanese candlesticks in the Western world. Okay, I became very familiar, very much acquainted with the nuances and the things that were available. And I thought I discovered the Holy Grail at one point, and the more and more I learned about it, the less and less I was enamored with what I had learned. And, you know, I kind of outsmarted myself. And now that doesn't mean that I take away anything that I ever taught or understood about Japanese candlesticks, except that they weren't the Holy Grail. Like anything else, smoke coming out of the back of the airplane does not tell you where the airplane is going to go in the future. It tells you the direction it's going now. That's the whole point. When you see the contrail coming out from behind a jet, you can see where it's been and you can see where it's aiming. You have no ability to know if it's not about, or that it is or is not about to make a hard left turn or a hard right turn, or drop in altitude, or rise in altitude, or slow down. You can project, but you cannot accurately predict. And it's just like in the world of technical indicators. We have indicators that are called leading indicators, which is bullcrap. Okay, I'll say it boldly. Leading indicators are bullcrap because there's no such thing as a leading indicator. Nothing leads price. Nothing dictates that you can measure what is going to happen to the price movement. If you happen to make a guess based on somebody's technical indicator or something and it happens, it wasn't because you made it happen, and it wasn't because you can see the future. It's because it went where it looked like it was going to go. That's it. Now, I want you to write something down because this is something that I taught students for years. This is something that stood the test of time. Okay, I want you to write this down. There are no leading indicators. They're predictive indicators. When you are faced with a decision where you have to make a choice and you have to make a decision that you're putting money on, that's called making a trade. You're doing that based on something. If it has to do with a price, and I'll get to the point I want you to write down. If it has to get to do with a price movement, you think something is going to move up to a certain price, you think it's going to move down because you're looking at an indicator, because you're looking at a Fibonacci, because you're looking at a chart that has a support and resistance line and the stock is moving towards a support or resistance line. Whatever that stock does, if you make the huge mistake of saying that you knew it was going to do that, oh, I knew it was going to do that. You see, my indicators work. Right? My image that I'm using, this pattern, it works. Boy, this candlestick pattern predicted exactly what it was going to do. Now I can trust it. Guys, you've just committed the unpardonable sin in trading, because the stock is either going to do what it looked like it was going to do, or it's going to do, or it's not going to do what it looked like it was going to do. I don't have any control of that. But if it does what you think it was going to do, that is your downfall. So here's what I want you to write down. Think is a 5-letter word, T-H-I-N-K. Looks is a 5-letter word, L-O-O-K-S. Please put a circle around think and draw a slash through it, the universal sign for bullcrap, or no, or stop, or this ain't going to happen, or don't do that. Think has nothing to do with it. Okay? I think it's going to do this. Don't do that. Don't fall in that trap. You say it looks like it's going to do that. Now, sorry about that. I didn't have it turned down. Now, if it does what it looked like it's going to do, that's great. It just did what it looks like it's going to do. If it does what you thought it was going to do, now you start to take credit for your amazing prowess and your amazing ability to predict where a stock is going to go. You can't do that. Not unless you have inside information. Perhaps you might be able to do it, which is illegal. Other than that, guys, you have to adopt a philosophy that it's going to go where it's going to go. It's going to do what it's going to do. If you can lay out a projection to say it looks like it's going to go there, I'm going to set up this trade so that if it does that, I'm going to do this. And if it does, I'll make this much money. Awesome. What if it doesn't do that? Well, then it didn't do it. Was I wrong? No, I wasn't wrong. I described and I made the trade based on what it looked like it was going to do. Right? It looked like it was going to do that. It didn't do it. Okay. So was I wrong? No, I wasn't wrong. I was exactly right. It did look like it was going to do it. It just didn't do it. Okay. End of story. Don't cry. Don't throw something through the window. Don't get upset. Don't get mad. It wasn't your fault. It did look like it was going to do it. It was a perfect triangle pattern and it looked like it was going to trade into the wedge and break out. It didn't. It broke the other way. Okay. It looked like it was going to hit support and reverse. It didn't. It kept going. It looked like it was going to hit support and bounce. It didn't. It went through. It looked like it was weak this time. It was going to break through the bottom of that support level. It didn't. It bounced up. Okay. So what? You set up your trades based on what it looks like it's going to do. You do good risk management. You do good profit benefit analysis, and then you roll the dice on it because you don't have any control. And if it turns out that the indicators you're using or the lines that you're drawing work really well and you are benefited and the price goes in your direction and everything works out and you make money 7 times out of 10, that's phenomenal. Good for you. But don't start taking credit for it because that same indicator, that same pattern, that same thing that's worked for you 7 out of 10 times can suddenly stop working for no particular reason. Does it mean you're wrong? Means you're stupid? No, it just means it quit working. And guys, that disconnect, that interpersonal disconnect from trading is essential. It is so easy to get caught up in thinking you're no good or you're magic. And most people are in that spot. They either think, I'm no good. I'm inconsistent. I thought I had it, now I don't. Or I'm on a roll, I'm magic. I'm amazing. Okay. Charles reminds me of the way that I used to teach this was the concept, the image of you're dancing with a gorilla. Guys, if you're dancing with a gorilla, that's awesome, but you're not leading. Okay, just recognize you're not leading in this dance. You're the partner that's standing on the feet of the gorilla. You're going where the gorilla goes. And if you can figure out the rhythm, great. Charles, I got another analogy for you. Has anybody here rode a bucking bronco or a bull, an actual bull in a rodeo? I'm just curious if anybody ever did that. Maybe when they were a kid, who knows? Maybe you're a PRI or PIR, professional rodeo, whatever it is. Anybody ride a bull or a bronc? Probably not. Not very many people do in this life. All right. Has anybody ridden a barrel? Okay, Will says the fake ones. A barrel or a fake bull that they have, it's on an articulating arm and it bounces around. Or the ones I really like, the ones I grew up with, is you have a barrel and you suspend it with 4 ropes between 4 big poles and you climb on that sucker and then 4 friends start yanking on the ropes. That's a trip. Nobody lasts very long on that one. That's wild. Okay. But the point is if you can get in the rhythm with that, then you can hold on. You can ride that bull for a little bit. Okay. But what happens is that you might get 1 or 2 moves and then suddenly one goes the wrong direction and you get tossed and you get banged up and thrown around. That's just kind of the way it works. Will says, I've been on mean horses too. Well, okay. So you got a little taste of that. If you can get in the rhythm with, oh, by the way, how many of you have ridden a horse and tried to ride a horse when it's trotting? Okay. Running, when a horse is loping, you can kind of figure that rhythm out. I'm doing it right here. If you see the camera, if you move with it, you're doing a lot of movement, but you're moving with it, and you can be okay. You're dancing with the gorilla. But when a horse starts to trot, that's a little more complicated, and you got to get that figured out. Otherwise, you get bounced around and it hurts. And if a horse takes off when it's walking and you're not ready, you can get left in the dirt. Okay. The bottom line is, if you're dancing with the gorilla, you're not leading. You better relax and try to flow with it. And if you do, you can flow with it. You can get in the rhythm and you can do pretty good. But every once in a while, the gorilla goes, I'm done, and tosses you. And that's okay. It's not personal. Guys, that's the point. You've got to allow for the fact that you have no control over what the price is going to do. Nor do you have the ability, unless you have illegal inside information, to know exactly where it's going to go. I don't care what indicator you've got or how good you are at charting and recognizing patterns. You want to just get in the flow with it. You want to be able to 6 out of 10, 7 out of 10 times, be able to be in the right place, see what it's doing, set it up. And if it works, great. If it doesn't, nothing personal. You weren't right. You weren't wrong. You cannot be right or wrong. You've got to give up the concept of being right and wrong. If you do the right thing at every point of the way, the winning will take care of itself. There will be enough winning trades. You'll make money if you do the right thing, if you do the right process every time. Well, the right process doesn't mean you guessed which way it's going to go right every time. The right process doesn't mean that you had an indicator that was right every time. The right process is that you put all the information together, you did the right risk-benefit analysis, you had the right risk ratio, okay? You had good control of your entry and exit points. You knew ahead of time what your risk level tolerance was and what the reward probability was, and you made the trade based on those things, and then you reacted properly when this trade either went in your direction or against you, or it did nothing. If you followed the plan, it was an awesome trade. That's the whole point of it. Okay? This is all set up for what we're going to do. We're going to look at some charts here. And how many recognize the reference that I gave about just doing the right thing in each moment? The winning takes care of itself. If you think about winning and losing, you're already dead. Where does that statement come from? Anybody remember where that comes from? I'm just curious. Some of you go way back far enough you might remember. That is a hugely wonderful piece of wisdom. Somebody said Musashi. That's close. And maybe he did. I've never read it. I've read a lot of the stuff from Musashi, but Steven Seagal told me that to my face. Okay. Name dropping. Yes, I know. Sitting at his house. Yes. Out by the pool under a cabana. Yes. For 2 hours. Yeah, it was awesome. It was fun. But there's only a couple of things that I remember from that whole experience. And he said, when you are in combat, when there is life on the line, when something is truly valuable on the line, if you make it about, in a conflict, if you make it about winning and losing, you're already dead. You simply do the right thing in each moment. The winning will take care of itself. Powerful, guys. Powerful. You do not have the ability to know which way the price is going to go. You just don't. You know, as much as I thought that I had Japanese candlesticks all figured out, it's just another tool that helps you get an idea of what it might do. And it might do it based on what it did last time or what it's done 6 out of 7 times. Guys, when you've got an indicator that's right 70% of the time, how valuable is that? I'm serious. If you had something that would make your trade work for you 7 out of 10 times, how excited would you be on a scale of 1 to 10? Somebody just dropped some numbers in there. If you had a 70% accurate indicator, would you be excited? Okay, everybody's very cool. Tripp says, yeah, but how often does that occur? Let's say it occurs all the time. It's always right 70% of the time. You signing up? You know, most people, it's like, sign me up for that one. Oh my gosh, 70%, 7 out of 10 times? Yes. 7 out of 10 means 3 out of 10 it doesn't work. What are the odds that the next time you trade that, it's going to be one of the ones that work or one of the ones that don't work? 50-50. Will says, Tripp says 50-50. Helen says 50-50. That's right. Guys, it's a crapshoot. It's a roll of the dice every single time. But it's right, 7 out of 10. Correct, over time it is. But do you know for sure that this is going to be a 7 or one of the 3 that doesn't work? And the answer is you don't. So every trade gets set up exactly the same way, as if you didn't know, but you have a reason. Why? What's the reason? Well, it's right 7 out of 10 times. Okay, so there's a probability. There's a good probability it might work. This time, I don't know. It's a 50-50. But if I keep doing it with something that's right 7 out of 10 times, the odds are in my favor. Yes? Yes, they are. But what about this next trade? 50-50. And so you better be set up so that if it goes the other way, it doesn't kill you. It doesn't disappoint you. It doesn't discourage you. It doesn't blow the trading account because it's 50-50. All right. So guys, my whole presentation here is in this one slide. Which comes first, my indicators and my ability to draw lines on a chart, or the chart movement? Well, if I draw the lines and it follows my lines, then I could start to think, well, maybe I'm a good line drawer. Maybe I can lay a line out there and the stock will not cross that line. You will not cross that line. Oh, look, it's behaving. It listens to me, right? Whoever's moving that chart has got a secret camera and they just listen in on me and they say, what does Ryan want? Well, Ryan says it's going to stop here. Okay, you better make it stop there. And people literally will get that convinced that they're that good. They really will. What if you had an indicator and the first 7 times it worked perfectly? Well, you would believe in 7 times that you got the world by the tail. I got it nailed. This is great. I'm in. This is me. You want to follow me? Check this out. I don't lose, right? I win every time. 7 out of 10 times, or 7 out of 7 times. And about that time, you were totally convinced, you've bought into this nonsense, and then it goes wrong. Oh, well, it's just one time. Then it goes wrong a second time. I mean, 7 times. Okay, it's bound to happen. All right, next one. It goes wrong 3 times. Guys, I'll tell you what, 3 times in a row, that'll kill anybody's confidence. Now you're anything but confidence. Now you're going to trade scared. Now you're going to make some adjustments because, well, 3 times in a row, something must be wrong. So you start changing up. And because you changed it, the next time, which would have worked, doesn't work. And then you spiral. Guys, this is the state of trading. There's books and decades of people complaining about the fallacy of believing anything, right? Except somebody who's had 6 in a row or 7 in a row. Now they've got a big YouTube channel and they're bragging about how, hey, I got something that doesn't work, doesn't fail. Look at this, 7 times in a row. I made this much money. Everybody send me money. I'll teach you how to do it. And then boom, it's gone. Okay. That's life. That's the way it works. So please, one of my other maxims, when you're trading, guys, you're in the bleachers. You're not in the field. You can't affect the game. You're not playing. I just watched a video this morning. It just popped in on my Facebook feed that I was thumbing through. And it was an homage to Mike Ditka. How many of you remember Mike Ditka? What was he famous for? What was Mike Ditka famous for? Anybody? Well, yeah, Mancy, yes, football, but there's a particular thing in football he was famous for. Okay. Let's see, who was it? Charles. Somebody said, oh, yeah, it was Charles. Did you find yourself more of a directional trader? I enjoy that the most, but it has been tough with the whipsaw. Not so much directional trading, except that it was inside a pattern. I'm a pattern trader, Charles. If I can find the pattern, I'll trade the pattern. I don't care what direction it's going, but if I'm a pattern trader. Will said, look this up. Engage in combat, fully determined to die, and you will be alive. Wish to survive in the battle, and you will surely meet death. Okay, perfect. And Seagal's version of that was just an Americanized or an anglicized version of that. And I like what he added on there. Think if you do the right thing each moment, the winning will take care of itself. But that is absolutely true. I like that. I'm going to copy that down. Usugi Kenshin. Yeah, I mean that's a samurai principle that he was teaching me. Okay. All right. So let's follow this down a little bit. Football, Bears, tackling is correct. Defense, linebacker. Yeah, what he was famous for, guys, and this is important. He changed the way fundamentals of tackling was taught. Okay? He changed tackling for the worse. I love watching Mike Ditka. I hate Mike Ditka for what he did, not personally, but I hate what he did. Let me say that right, because I don't hate Mike Ditka at all. I hate what he did to football. He did. He made everybody think that they were gorillas on defense. He made everybody think that they could go up and bear hug somebody and tackle them around the chest. Just knock them off their feet. Just lift them off the ground and slam them to the ground. Everybody wanted to tackle like Mike Ditka. Guys, I was taught how to tackle by the physics principle that a person cannot run without legs. Okay? That you can't run without legs. I'm sorry. You take somebody's legs out, they can't run. You try to tackle somebody around the chest, if you are bigger, badder, and mean enough to knock this big, strong person who's leaning into you and literally knock them on their back, or you pick them up and slam them on the back, well, good for you. Good for you. Most people can't do that. Okay? Brenda, be patient. Be patient. The principle here is that fundamentals are what you have to fall back on. These are principles. These are basic, simple principles. When you're trading, you don't have control of the outcome. You do the right thing. Ditka changed people's perspective, thinking that this was a better way to tackle. It's not. And Brenda, when somebody comes and shows you a magic indicator and says, this thing will, you don't even have to think. This is AI. This is artificial intelligence. This, you do it different. Forget what you knew in the past. Just do this new thing, pay me some money, and I'll solve all your problems. Brenda, that's the point I'm making. This is relevant. I like that correlation, Will, sumo versus Aikido. Exactly. Guys, there's real simple principles about physiology that you can hit a person very easily at a certain spot and they fall down. Now, if you hit them in a different spot, they'll knock you down like a steamroller. They'll pound you into the dirt and walk on you. But that same person will go down like they've been shot if you hit them in the right spot. That's the basics. Those are the simple physics of tackling. And Mike Ditka screwed that up for decades. But in the last recent past and recent memory and future now, tackling fundamentals, it's going back, and the beautiful tackles are coming back because people are realizing, forget Ditka. Let's just do it right. Do it right. It works better that way most of the time, and it works. So they do it. All right, let's shift over now and let's go to our charts. Any other comments or questions, guys? What I'm teaching you this morning is an amazingly important principle. Yeah, it's simple. Yeah, you've heard it before, but guys, until it is fully internalized, you will keep falling into that ditch. You'll start trusting something too much. You'll start stressing over, I'm not drawing these lines right. I can't make the chart go where I want it to go, or I can't draw the lines where it's going to go. Who can? Well, they did it. Okay, they got lucky. If they can actually do it, if they can do that deliberately, well, then they're magical. There's nobody like them on the planet. Guys, you've got to learn how to make things work for you because you put the odds in your favor. That's it. You've put the odds in your favor. How do you do that? You set the trade up right with the right probabilities. You set the trade up right with the right risk reward percentage. You set the trade up right with a realistic target and exit points that will allow you to get out at a point that you can afford to get out if it goes against what it looks like it's going to do. It's that simple. Okay? If it goes the direction it looks like it's going to go, great. It's not your fault, not your credit. If it goes against you, not your fault, not your credit. It's doing the right thing in each moment and let the winning take care of itself. Guys, that's reality. That's trading. That's life. All right, I'm going to shift over, and I would like you guys to pick a chart. Pick any chart that you want to look at. And we're going to look at that and see if we can find pattern and trading scenarios that will allow us to get an idea of what it's going to do. Okay. And I am going to deliberately just, I think I can do this. I was practicing with it, but I am going to move the charts back a little bit, and we will draw some lines, and then we'll see how accurate or how able we are to get an idea of where something is likely to go based on either an indicator or charting. And I'm going to basically stick with charting on this go around right here. So let me change the screen sharing to the chart. Get over here to the right spot. There we go, new share. And we go to here. Let me know when you can see the charts up here. We've got the stock charts up here. Okay. All right, let's see. We had AMD, and then we'll do the SPY. So here's AMD, and I want to take let's see. There's a global command on here to clear all the lines off at once. Does anybody remember how to do that? I mean, I could switch to a different window on this, but does anybody remember the quick help me out? What's the global command to clear all the charts out? Anybody? Rick? Let's see. I don't know. Why can't I remember to clear all the charts? Maybe it's a global command right here. New range. I'm getting them one at a time, but there's a quick command, and I can't remember what it is. All right. Well, okay. So right now, what we're looking at here is AMD, and we're looking back. Let's see. We've got a year, a full year. We're looking back to May here. And so we see AMD moving up to a resistance level that went back to a year before that. So May of 2022, we're in May of 2023. We're at the same point. We had lower lows. We had a descending channel. You can see the top and the bottom of this channel coming down here. And now we reversed and we've headed back up. So let's draw a line starting down here at what seems to be an obvious reversal. And we'll run this out. Come on, lower yourself down here. Let's try this again. Okay, there we go. Now we want to take and we want to get away from, here we go. All right, so let's take this up and we'll duplicate this line. And I want to bring, let's see, we've got, I want that up there as a reference point. Let's pick this up down here. All right, and what I want to, I'm having trouble with my battery died, and I'm using my finger on the mouse, and it's not quite as good. So you're seeing that we don't line up on this first rotation off of that pattern. It changes. So what does that tell us? That tells us that that is maybe a bigger picture, but we changed in the angle of attack. So now we want to do a new line, and we're going to run up here. And we're going to find something that is close. And you can see now this angle is going to work for this rotation, which went a grand total of 2 rotations. So that there we've got a nice upward push that went 1, 2 rotations. You might even call it a third, but there's really only 2. When we have trends, significant trends, they tend to go 3 to 5 times on rotations and then break down. So I'm seeing that angle of attack. It had 2 nice rotations. That's true. That's nice. And it breaks back down. So what you do at this point is we take and we go back to the last point that we had as a reference, and we bring this out and we just project that out right there. Okay. And then we take, I got to get rid of this. I got to turn the eraser off here. Okay, so I'm a little surprised right here. Let's see. I'm getting my eraser is stuck. I don't know if anybody's had the eraser get stuck on before, but all right, we're going to go back to basics here. I don't know why my eraser is stuck on this, but we're going to move this out of the way. Hang on a second. Bring this back. Okay, so let's see if anybody's got help. Let's see, clear the old drawing. No, that's it. That's not it. I activated the eraser and I can't get it to turn off. And that's what's causing me some grief right here. So if anybody's got a suggestion, I'm open to it. But let me put these lines back on here real quick. There we go. All right, so I can draw trend lines, but if I try to duplicate anything, I keep getting the eraser jumping in to cause me grief. I put the hover over it. Yep, it keeps erasing my line. So I can't grab the line and duplicate it, which is what I like to do. I'll have to use a channel. Maybe I'll just use a channel. Okay, so that's what we had. Then we'll go ahead and we'll drop in our horizontal line here. Okay, there was our, every time I touch a line, it erases it, and it shouldn't be. I should be able to have a strict pointer on that. So you click the double arrows at the top of the right side. Okay, the double arrows. That's chart move. Look at that. Look at that. I had that. That's an interesting hack that I did not know. Thank you very much. All right. So now let's go back and let's lay down one more line here. No, we don't want that. Go back and we'll put the trend on here. We're going to lay this guy out. Yay. All right. Now this is what we're looking for. So now we're going to run this one up, and we have an interesting correlation here. So look at this. So when we back out, we had the double rotation right here, and then it. So taking these 2 points, which is our next lower bottom here, this could be. Now we don't have a trend yet because we only have 1, 2, 3, 4 points. We need 2 tops and 2 bottoms in order to determine that we've got a trend or that's either going up or down. So this is effectively one rotation. The second rotation, we come down, if we put in another bottom, the projection would be to follow this line right down here, the one that's at about 84 right now. Okay. So right now, from a trading standpoint, we're at a resistance level in uptrend, and there's definitely an uptrend. Is it going to follow this angle of attack? And the answer is we don't know, but it could. And so if we get any reversal downside movement here, we would look for it to pull back to this line if we're going to set up any kind of a trend. So let's go ahead and just move forward on this just to follow this line of reasoning out. Now look at this. We have 1, 2, 3, 4 days we spend up here, 5 days we spend up here at this resistance line. Now it's either going to break to the downside or it's going to break to the upside. In this case, this may be an earnings report. I'm not seeing the news on it, but it could have been an earnings report. Okay, so but we get a big gap. As soon as we get a big gap, then this pattern expectation that if it turns and heads down, we jump into a bearish trade at around 106 or so and look for an 84 target down here, 80 or an 80, what, maybe 86 target, 85, 87 in this range. That would have been a trade. But it didn't. It gapped. As soon as it gaps, you go, okay, my bad. Didn't see that coming. If there was news, then we should have seen it coming, and we would not have made a trade on the news before it came out. But if this was a surprise news announcement that came out, okay, so what? No big deal. So now what we do is we look for a bigger picture. And we say, all right, if we're going to jump up here, we reached up, and we've got 2 lines here that count. All right, now we look back over and we say, okay, do we have any significance? When we look to the left, we're looking to see if there's any significance. And we do. We've got a major failed rally that went from 101 up here to 132, and then went all the way back down almost to 101, went back down to 104. Okay, that is a major fail. These two guys are a target. When we look back to the left, these are both historical resistance points where there was consensus of the market and they reversed. So whatever this bullish news was took off, and it went boom, boom, shooting up in the air until it hit some old resistance. And people said, that's enough. And they bailed out. So now the question becomes, okay, so what's going on? And the answer is we have to deal with 2 major things right now that I see. One is the gap. So we've got to define this box right in here. This gap area has got to be respected, because filling that gap will be one pattern to look for. Reaching back up to 130 will be another pattern to look for. Dropping back down to 108 would be another target. So these are just targets. Now, if we add indicators to it, it might give us an idea if this was something that's run out of gas or if it's going to continue. But let's go ahead and move forward on this because I don't see a trade right here. I see a trade set up if it gets back to 108. I see a trade set up if it gets back to 130 up here, 127 to 130. But right where it's at right now, nope. We're sitting on the edge of a cliff. So we wait, we watch it move forward, and boom, there we go. It comes down, it drops in, and there's your gap fill. All right. Are we in a pattern right now? And the answer is no, we're not in a pattern. We're pinging around between some historical support and resistance levels, but we're not in a pattern yet. Are we establishing one? We're getting the hallmarks of it. Look up here, the 130 range has had two major reversal points. That's resistance. We've come back and filled the gap, and we pounded on that for 4 days and didn't fall through. Rallied up a little bit, came back down. So there's hesitation. The market, the traders are not sure. Do we have to go farther to pick up support? Or can we just gather support here and then keep this bullish move going? The indication would probably be you keep the bullish move going. Okay, they've come back, they've consolidated, they found support, and now maybe they can get going again. But this range, this 130-ish range down to 108 in this range, these are the two right now control points. If we go into a sideways pattern, those will be the two most important points until the pattern breaks. So now your expectation of setting up trades is between 108-ish and 130. Okay, so that's how I would have back in there tried to set up the next operative trade. If we went back just a little bit on this, as soon as it came down, and it jumps. Sorry, can't control it one day at a time. Maybe a little bit more if I do it slow. It wants to jump now. Anyway, when it came down to 108 and closed that gap and spent 2 or 3 days, boom, that's a trade. On the upside, you've got all the way up to 130. On the downside, you're dropping all the way back down to 88. Those would be the targets. That's big enough. There's a big enough profit to have a 4-to-1 ratio and to make trades off of that. But as I said, when you get to this point, is there a trade right? Well, see how fast that jumped, sorry. Is there a trade there? Not until we come off of one of those points. Did it come back to 108? It did. Give you another opportunity. Boom. Now you see the tops, down descending tops. 108 is definitely holding. We have a descending pattern. And in that descending pattern, now we start to define the next major confrontation, which will be a showdown at 108. Okay. And we broke through. So when we break through, we look back and we say, okay, can we extend this up and find any reference point? Are we falling back into an older pattern, a stronger pattern? And the answer is, well, that's interesting, right? That's very interesting. Now watch, I'm going to take this line right here, and then we'll move on to your next one. We've got to cover several, but I want to kind of set the pattern for what we're doing right here. Come on, quit spinning. This line right here, the parallel one to the baseline right here, if we extend this through, we're going to go right through the middle of a lot of traffic. Well, why would we want to do that? Well, because there was a gap, right? Okay, so this line is parallel. Check it out. It's parallel with our baseline. So we put it back up there and we say, all right, is this going to come back into play? If our baseline is working, will a parallel top line start to come into play? Well, we gapped across it. What did we do? We fell back inside, came up, hit it once, hit it twice, and now we're back down to support. So now, guys, if you look at this, this becomes a 1, 2, we're in a 3 rotation pattern. This is the one that's working right now. So you simply, as you're trading AMD, you're simply going to carry this baseline out here. This is the base for your upward trending line. And the dual, the showdown, is going to be right here on this compression back. We either bounce off of this and head back up, which opens up 130 again as the target for 2 reasons. See, our top line, bottom line, they both would point up here around 130. If we break through, support is down to the next major support area, which is down here around 84-ish. There's a lot of traffic down there. And so that's how we do it. And this takes us through, this is through September right here. I think it may be still updated, but that's as far as we need to go on this. Let's go back and let's look at the next one. Okay. Let's see. I got to scroll back up to find out. I think it was SPY. Okay, Brenda, on SPY, somebody else said SPY back to a certain date. I don't know if we can do that. Or maybe, I thought I saw that, maybe not. SPY, oh yeah, Will said back to June 22nd on SPY. Okay, so let's do that. Let's back up. Well, wait, Brenda, you brought that up first. Well, somebody. What do you want to see? Let me ask before I do it, because I want to do what you'd like. This is SPY Brenda. Brenda, what did you want to see on SPY? And then we'll look at what Will was asking. Anything specific, Brenda, that you wanted to see on SPY? She said, yeah, you can back up to June. Okay, well, let's do this. April. Delayed reaction here. I'm trying to do it with the mouse. I guess I could drag it, but that's close enough. There we go. All right, we're back to June right here. Okay, well, you can see that we've done a little work on this in the past and that are still showing up. These are the artifacts from previous classes. You can see that we're at a major support level at 416. We've got support down here at 380-ish, moving into a sideways channel. Okay. So the question becomes, do we have a pattern? Yes, we do. We've got support there at 380. We got resistance up at about 415-ish. There is not a lot of history in the past to give us 415 looking back in previous years, but this recent, at the beginning of this year, we have a lot of history there. 1, 2, 3, 4, if you want to count 4, maybe 5 failures or pullbacks from 415. But we didn't go all the way back down to the 380 in this last little bit of activity. We did once, but now as we look at this, and I'm going to reduce the background because it doesn't help us here. Okay. So now our pullback from the resistance up here, we pulled back into about 404-ish. Significant? Yeah, I mean, we had 405-ish, we have 404, we came down, touched it again, bounced up. So we've got some resistance or support showing up at this 404, 405 range, and we got resistance here. All right, so this becomes your short-term trade. Breaking above 417 or so, that's a bullish entry point. We'll find a target here in a minute. Breaking below 404, your target initially is all the way down here to 380. That would be the reason. Taking the trade below 404 would be a 20, 22 point trade. That's what you're looking for. What about the upside? Well, let's pull back a little bit and see if we can get anything that would give us any indication. Go back a little farther. All right, I can see 2 that are worth noting. One is this single top right here. It's a major failed rally up there at 430. So that gives you about 15 points or so, 12 to 15 points up there. And then, of course, you've got previous failed rally points up there in the 450 range. Okay, but for right now, a breakout above here is not going to be a uptrend per se. It's just a breakout. Your next target would be up here at about 430. All right. Now, do we have any trends setting up? Maybe. It's too early to tell in terms of uptrend or downtrend. The big picture, let's back up. Let's do it this way. the big picture, we start down here and we're going to use closing prices, not the intraday gap. And we'll first go up to the first rotation right here and say, did we have anything going there? Because that's the first big rotation pattern. And the answer is, I don't know. Let's lay this up on the first set of tops and see. Okay, that would be a macro pattern. You see, we had the shorter one in here. We had 1, 2, 3, 4 rotations. It broke down. So this sets up the next one. You can see we bounced off of here. So we got 1, 2, 3 bottoms. It started up, compression tops coming down, and we broke the pattern. So what this does, guys, this is begging for us to project out one more line. Okay, and that line would be to come out here to these bottoms. And I tend to run it off of the closing prices first. Adjust that up just slightly. We'll do it when we can get to that a little bigger. Okay. Okay, and so this one is just lowering the angle of attack down a little bit. I'm going to draw one more line, and please don't get too distracted by this, but just let me throw this out here. Right there. All right, so now let's advance this and see what we do. We've identified targets up here at a breakout to the upside of 430 to maybe 436. On the downside, we have a trend target that would be down here around 395-ish, and then hard support, horizontal support down at 380. All right, let's just see what happens here. As we move this forward, if I do it slow enough, it tends to not jump on me. We're still consolidating. We still have got our resistance level trading into a wedge. Something's likely to pop. Boom, there we go. So there's an upside breakout. 430 to 436 is the upside target. Support would be down below where it consolidated on that last little bit. Okay, comes back down, boom, takes you out. It was a head fake. If it's a head fake, then, and they can't go to the upside, then you look to the downside. So 404 and 380, 390, what, 8 or so, if we follow the trend line, or 380 on a full breakdown. Okay, we're still consolidating. Boom, there's the break. Now look at the target, 430. Did it work? Just like magic. Now we either break to the upside and we'll look for that next push, which will be following this blue line right here as a target. And we say, well, wait, it's just a line. You're right. And you remember that we had a horizontal line. Our next major resistance line was right up here. These are both gaps, so let's draw this one in right here. So just from a line, and guys, it'd be really fun. Rob and I do this all the time to throw the fibs on here. And the more things you can get to line up, the better. If you can get your indicators, your charting lines, your pattern lines, and Fibonacci's to all point to the same place, does it add more weight? Yeah, but does it make it go there? No, it doesn't make it go. It just makes it more interesting if it does. So let's see what happens. All right, well, this is fun, right? Look, we extend this on up. And I mean for it to slide down on purpose. There we go. Bring that up. There's a parallel line. We'll keep advancing. And we can hit resistance up there again at that 445-ish area, 444. It was interesting. The gap went right to that next point. If we go any farther, our next target up there is the 462-ish. Gonna make us look good. There's our gap. Back to test. Are we going to break through? Yep, we break down to seal the gap. And now we're looking for support. Okay, so two things. Long-term pattern support is right here. I'm still looking at this as the heavy influence on this trade. And so as we watch this move forward here into September, where we have targets. Well, our targets are up there at the 460 range. Long-term fallback would be back on this line in the 420 range. So are we following patterns? Yeah, we are. Are they magic? No, they're not, but they are identifying the momentum pretty well. So can we trade off these lines to the penny? No, absolutely not. But if you find a pattern that gets really accurate, can you trade it for 1 or 2 rotations? Usually you can. But once you start to lean on it too much, once you start to think that it's magic and it's not going to fail you, that's when it's going to kill you. There we go. Delayed reaction. Look at this, guys. Take it up right to there. Overshot. There we go. Okay, there's a change of direction, but it's still falling back into the big picture. All right, the whole point, guys, is sometimes it'll be so accurate that it'll look like you're the one that's controlling, you're holding the marionette strings and you're making that thing dance to your will. Other times you can't find anything that works. And that's simply because it's not trading in a way that is laying down a pattern. So my last piece of advice that I want to give you today, and I want you to write this down, is if there's no pattern, there's no trade. Okay? If there's no pattern, there's no trade. So if you find a pattern, trade it until it breaks. These are so simple, but these are rules to live by. If there's a pattern, trade it. But don't be offended when it breaks. Don't think that there's anything wrong with you or there's anything wrong with the universe. If there's no pattern, don't force it. If you find a pattern, trade it until it breaks down and then look for the next setup, next trade setup, next pattern setup. It's really simple. Not necessarily easy, but it's really simple. Okay. Let's see who asked about the gap. I'll answer that real quick. Charles says, what about the gap back there? Let's see, the gap in August. This one right here, August 2nd. Yeah, what about it? I don't know. I don't know if there was any news on that day. Was it significant? Look, guys, our target area, and let me bring this back just real quick to show you. Our target area, here's our closing price. It's actually up slightly right there. That was the absolute high on that. But if I pull this back down, I've got 1, 2, 3 areas of resistance here, plus or minus 458 by about, so you got about a 4-point range. You have a fail, and this one tried to go past it and failed. So you can put your cursor right there at about 458, 459 and say that's the epicenter of 3 major failed rallies. When this went shooting up, and it hasn't been there for a year and a half almost. It hadn't been up here in a year and a half. So when you shoot across resistance and you look up here, where the trader's going to look backwards to find, how far do we dare run this thing? Are you going to stay in? I don't know. Are you going to stay in? It's a little dicey. We haven't been here for a year and a half. I know. What happened a year and a half ago? Well, we failed here 3 times. Maybe I think I'm going to lighten my position. Yeah, me too. And the whole thing fizzles. That's what happens, guys. It's no more different than guys sitting around a bar or anybody sitting around talking about as a group think, what do you think? I don't know. What do you think? And if everybody starts heading for the door, you may head for the door. You don't know why, but if they're leaving, I'm going to leave. I don't want to be the last one here. And this is not coincidental. Is it a guarantee it's going to happen? No, it's not. But if it happens often enough to lay down a pattern, then get ready. And if it works, great, do it. If it doesn't, well, you go, well, it didn't work that time. But in this case, it's not a coincidence. And I don't believe for a second, you couldn't convince me, I don't think, that it just magically stopped up there at 458 for no reason. I think there's absolutely a reason. I wasn't trading that day. But if I had big positions, if I was trading big positions in the S&P, I would get up there, and as soon as I started up to see other people hesitating, I'd look back and I'd say, oh, uh-oh. 3 times about a year and a half ago, people got up here and lost their nerve and lost their shirt if they stayed in. I think maybe I'll lighten up my position here. Or if anybody else leaves, I'm going to be right behind them. That's the mental, that's the gymnastics of the group dynamic that still happens, even with trading algorithms. It still happens. You get this movement like birds in the sky, when they're flying in this big flock, and 2 birds at the front turn left, and the whole flock, you see this beautiful pattern, it sweeps to the left, then they sweep to the right. Somebody's up there driving the boat. And if they start making turns at the same place, it makes a pattern. That's all I'm saying. So we go back to the beginning. Who's zooming who? Am I zooming it because I could draw lines that make the chart look like it does what I want it to do? Or is the chart making my lines look good? Well, right now, the chart maybe make my lines look good. And maybe tomorrow it'll make me look like an idiot. I don't control price movement. But if there's a pattern, play it. If you can find a pattern, play it. If there's no pattern, there's no trade. And play the pattern until it breaks, and then look for the next one. That's kind of what it works like. When you're trying to draw any kind of lines, when you're trying to draw indicators, when you're trying to use anything other than the dart method, then follow this advice. Find a pattern, play it till it breaks. And don't get caught up thinking you're God or that you're magic just because you get 7 out of 7 in a row. Remember, 70% is awesome, but when you have 3 go against you, you'll think the whole world crashed. And neither one was your fault or your credit, either one. All right, take care, guys. God bless. Have a wonderful, wonderful rest of your day and a great weekend. And we're getting close to holiday seasons. We're going to have Thanksgiving on us, and then Christmas and Hanukkah and all kinds of fun things. It's a fun time of the year. The only bad thing is that here in Seattle, it gets gray and rainy, and that just gets older and older and older. Take care, everybody. You're welcome. Thanks, Charles. Appreciate it. Thanks, Will. Appreciate it. All right, you guys are awesome. Take care. And Alyssa and Lee, thanks for running the show here. Appreciate it, guys. Take care.